In the glittering yet cutthroat world of high-stakes real estate and casinos, few names evoke as much drama, triumph, and controversy as Donald Trump. Picture this. It's 1990, and the man who just a few years earlier was hailed as the King of New York, owner of yachts, airlines, and towering skyscrapers, stands on the brink of personal ruin. Billions in debt loom like storm clouds over Manhattan. Banks are circling, ready to pounce. Yet, from these ashes, Trump would rise not once, but multiple times, turning near catastrophe into a narrative of resilience, savvy restructuring, and ultimate rebound. This is the story of how one man repeatedly stirred down financial oblivion and emerged stronger, leveraging the very laws of bankruptcy to protect his empire and rebuild his fortune. But let's be clear from the start. Donald Trump has never filed for personal bankruptcy. That's a common myth. All 6 corporate bankruptcies tied to his businesses were Chapter 11 reorganization strategic tools that allowed companies to restructure debt while continuing operations. These filings affected investors, bondholders, and creditors far more than Trump himself, who often retained control or branding rights while shedding burdensome obligations. As Trump himself has said, he played the bankruptcy laws masterfully. They're very good for me. The roaring 80s, building an empire on borrowed boldness. To understand the recoveries, we must rewind to the foundation. Donald Trump inherited not just money but a real estate dynasty from his father, Fred Trump, a successful builder in Queens and Brooklyn. By the 1970s, young Donald had taken the reins of the family business, renaming it the Trump Organization and shifting focus to glamorous Manhattan projects. The 1980s were Trump's golden era. With favorable tax laws, booming markets, and easy credit, he borrowed aggressively to fuel expansion. Key triumphs included Grand Hyatt Hotel 1980, Trump's first big Manhattan deal, renovating the aging Commodore Hotel into a luxury property. It catapulted him into the elite. Trump Tower 1983, the iconic Fifth Avenue skyscraper became his signature, housing luxury condos and his penthouse. Atlantic City casinos, entering the gambling boom. Trump opened Trump Plaza 1984, Trump Castle 1985, and the crown jewel, Trump Taj Mahal 1990, billed as the 8th wonder of the world, costing over $1 billion by the late 80s. Trump was a celebrity billionaire, or so Forbes estimated, though he often inflated figures. He owned a 282-foot yacht, Trump Princess, the Trump Shuttle airline, and the Plaza Hotel in New York. Net worth estimates soared to $1 to $3 billion, but it was built on leverage. Over $4 billion in loans from more than 70 banks, much at high-interest junk bond rates. The hook, ambition outpaced caution. As one analyst noted at the time, Trump's bets were massive, but the foundation was fragile. The 1990 crash. Teetering on the edge of thin came the perfect storm. The 1991 recession hit real estate hard. Atlantic City's casino market saturated with competition. High-interest debts became unsustainable. Trump's personal guarantees on hundreds of millions made him vulnerable. Taj Mahal Crisis 1990-1991, financed with $675 million in 14% junk bonds, the Taj opened lavishly but quickly faltered. By summer 1991, it missed payments and filed for Chapter 11, the first of Trump's corporate bankruptcies. Trump was personally on the hook for $830 million across ventures. Banks feared a domino effect. If Trump went personally bankrupt, it could trigger chaos. Instead, they negotiated. The recovery playbook emerges. Asset sales. Trump sold the yacht for $20 to $40 million loss, the Trump Shuttle airline, and other luxuries to raise cash. Debt restructuring. For the Taj, Trump ceded 50% ownership to bondholders in exchange for lower interest rates and extended terms. The casino emerged from bankruptcy in October 1991. Personal concessions. Banks imposed a $450,000 monthly personal spending limit and required a chief financial officer oversee the Trump Organization. Family support. Reports indicate Fred Trump provided crucial help, including buying casino chips to inject liquidity. Similar restructurings followed in 1992 for Trump Plaza, Trump Castle, and the Plaza Hotel. 3 more Chapter 11 fines. Trump gave up stakes, e.g. 49% of the Plaza, but retained operational control and avoided personal filings. By 1995, Trump's businesses reported massive losses, $916 million in 1 year alone, per tax records allowing huge tax write-offs. Critics called it failure. Supporters saw genius in using losses to offset future income. Yet, Trump survived. He shifted risk, no more personal guarantees on new debt, and crucially, he took casinos public. The mid-90s pivot, going public, and branding golden. 1995. Trump consolidated his Atlantic City casinos into Trump Hotels and Casino Resorts, taking it public. This raised cash, shifted personal debt to shareholders, and diluted his risk. Stockholders bore the burden as casinos continued struggling, but Trump collected salaries, fees, and licensing revenue. 2 more bankruptcies hit the public company. 2004 $1.8 billion debt, and 2009 post-financial crisis. Trump reduced his stake dramatically from 56% to approximately 10%, but kept the brand name lucrative. Meanwhile, Trump diversified into branding and licensing. No longer building everything himself, he licensed Trump for hotels, golf courses, and products worldwide. This low-risk model generated millions with minimal investment. The ultimate hook? The Apprentice. 2004. The reality TV hit resurrected Trump's image as a business titan. You're Fired became cultural gold. It earned him hundreds of millions and rebuilt public perception post-bankruptcies. The 2010s, 2020s, politics, peaks, and new heights post-casinos. Trump's core remained real estate, golf courses, hotels like Mar-a-Lago, and New York properties. Deutsche Bank became his main lender after others sent him post-single quotes ninities. Net worth fluctuated. Dropped during presidency. Forbes estimated $2.3 billion in 2021 due to COVID hits on hotels, but rebounded via branding, Truth Social stock, and crypto ventures. As of 2025, estimates range $5 to $7 billion. Forbes tilt $5.1 billion. Bloomberg higher. Key assets: real estate portfolio, licensing deals, and media. Political influence driving opportunities. Legal battles, e.g., fraud findings on overvalued assets, and fines tested in, but restructurings and new financing, e.g., Axos Bank. Could 90 strategies. The lessons of the comebacks: resilience or recklessness. Trump's story is one of phoenix-like recoveries. From near ruin in 1990, when he famously told associates he felt like a beggar on Fifth Avenue, to billionaire status decades later, he used Chapter 11 as a tool, restructured without liquidation, branding over ownership, turned his name into a perpetual revenue stream. Adaptation: from developer to licensor to TV star to politician. Facts substantiate the drama. 6 corporate bankruptcies: 1991, 1992 by 3, 2004, 2009, all casinos, hotels. No personal ones. Massive 90s losses enabled tax advantages. Recoveries via concessions, sales, public offerings, and pivots. Is it inspiring grit or leveraged luck? Trump calls it the art of the comeback. Whatever your view, it's a gripping tale of how one leader repeatedly turned financial fires into fuel for resurgence.